My main question is, nowadays, the entire market tends to overreact. So there are a lot of extremes. So how can you advise a young trader that just came to the company?
We tell people, look, for several months, most people lose money. You probably have never traded before.
Comparing today's market to back when you were on Wall Street, did you have to implement and recalibrate your right view?
This is the pattern that I discovered. So Professor Friedman, who received the Nobel Prize for his work on monetary theory, said that inflation is always and everywhere a monetary phenomenon. And yes, tariffs can temporarily increase inflationary pressure, but unless the central bank starts printing money, sustainable inflation is not going to show up.
You would probably agree that it's becoming harder. Maybe not for you, but for somebody that doesn't have that much of an experience.
And if I have to give advice, so the right view, if a lot of people over the years have looked at this phenomenon, and some of them have actually quite accomplished or distinguished themselves, and they reach like a very strong conclusion about some phenomena. That phenomenon is
Hello, ladies and gentlemen. I would like to welcome you to the 17th episode of our podcast. With me is Mr. Nikolai Stoikov. Hello, Mr. Stoikov.
Hello, Mr. Kirchev, and hello to our lovely audience.
This is the first time we're having this format with video.
Right.
Yeah.
Do you think your character can survive the video?
It's a bit different. You've been live on television so many times. It's my first time not being live, but being recorded.
All right. Yeah. So watch out what you say.
Yeah. There's a face to the voice.
Right.
Now.
Right.
Right. So episode number 17.
Yes.
The right view.
The right view.
I almost always start by asking you, what do you mean with that?
Right. The context here is like, this is like, I do lecture incoming traders at a large security, so Front Peak for that matter. That's the company most traders, all traders work for. And this is kind of lecture number 4. It's something that kind of gets slowly accumulated, and I became aware that this is something that's actually very needed. And yes, I would like to share with our audience. The right view is something that is a bit like adjustment to your view. So fortunately, both me and Mr. Kirchev are wearing glasses right now, and this is like the physical representation. So like sometimes your eyesight needs like a better focus or help. If you don't wear glasses, you may not see things well. I've come to believe that we are born with kind of sight defects or view defects, and those views need to be adjusted. And the result of that adjustment is what is called the right view.
Obviously, you're talking not in a, you're not talking about the eyesight.
No, we're not talking about that. We're talking about life events. I figure that a lot of people have incorrect theoretical understanding. And this is totally understandable because statistics and kind of statistical analysis is something that's a very new science, something that's been around only for 200 years. And the progress in the kind of adoption of those statistical analysis techniques is very slow, and people do not do it correctly. Let me give you an actual example. So this is like, we're going roughly how the lecture goes. So this is the actual example that I give to traders. Imagine you have a stock that trades between $4 and $5. The stock trades about 1 million shares a day on average. And 2 weeks ago, the stock opened at $8, and 10,000 shares traded 8, and then proceeded to trade with 50 cents increments down. So 7.5, 100 shares traded, $7, 100 shares traded, and so forth until it reached the level of 5, and then kind of normal price action resumed. The stock made like a very similar move this week, opened at 6, and proceeded to trade again with 50 cents increments down. And the 6 price print is something that's, 8,000 shares. not that much, given that it trades 1 million shares a day. And the question becomes, what do we do with that stock? So we're not going to ask our audience because most people get it wrong. I'll tell you how the statistical analysis and statistical arbitrage is done. Statistical analysis and statistical arbitrage trading is for you to remove those suspicious prints. The first one is that we really don't know if those prints are actually there. They could have been there, but they actually could have been removed at some point. We don't know if those transactions actually occurred. Even if they occurred, they're so strangely outside of economical kind of valuation of the stock that usually trades between $4 and $5, that keeping them, those prints, in the data series that you're managing and try to optimize your trading strategy will leave you with incorrect kind of trading strategies. And the pattern, the guiding pattern here is that the truth is always present. So this means is that if you remove a few prints from the stock, if the trading technique or the trading kind of bias or whatever you're doing is robust, it's not going to change its parameters so much. So what it means is if you leave those outliers there, naturally most people would try to get long the stock, hoping that another kind of opening print occurs. Another opening print may or may not occur. And this is kind of like experience. If you see repeatedly such opening prints occurring, and then my test would have been, I haven't done statistical arbitrage trading in a while, my test would have been, I want to see it more than 10 opening prints like that in a span of a year for me not to remove it. If I see only 2 or 3 kind of like outside of very suspicious opening prints.
So that was limited to 2 times only?
Yeah, that was limited to 2 times only. We're taking that example and we're going to flip it on something else. So this is like, again, from statistics and biostatistics. Imagine there is a drug that's being tested and it's stage 3 where it's a large population, I don't know, 200 people. And out of the 200 people, 20 people had adverse effect. 10% is really not that much for like a drug testing. And most of those adverse effects were like mild. So kind of nausea, stomachache, headaches. But they're not like diarrhea or like blood in the urine or something like that. That could be very dangerous. And out of those 200 people, 1 person died. And the family didn't agree to autopsy, so you can't be sure. And the right view on biostatistics is to ignore that person that died, because there's not that many adverse effects, and kind of death from a drug is kind of like a very adverse reaction. So since most adverse reactions were mild, the presumptions here would be that the person probably died from other complications or other kind of causes of death, not from the drug. And you would let it go and maybe supervise people that do it. There's another implication that's also very important, and then I'll give you the opportunity to ask questions. That you want to exclude exceptionally good or bad events from your consideration. And this is kind of really where the adjustment in view, the right view is. You want to exclude the possibility that you're going to win the lottery. Because if you correctly say to yourself, hey, my chance of winning the lottery is 0.01%, as we established earlier episodes, you're a monkey, and the monkey inside you is going to hear, hey, there is a chance to win the lottery. And he's going to play the lottery every week.
You never know.
You never know, right? So the correct view, the right view is to say, no, I'm not going to win the lottery. The probability of winning the lottery is 0. Technically, it's not 0, but you cannot handle those small probabilities. Those are defined elements. So those are defined elements, small probabilities, that if you actually allow them to be anything else than 0, totally disturb your psyche, and you begin to think completely irrational. On the flip side is, if you believe you're going to win the lottery, you're suddenly subject to very rare events. One of the example is, you read in the newspaper that some person got hit on the head by a meteorite. And since you're exceptionally lucky, but you think you're going to get lucky, you might also get exceptionally unlucky. So you'll be looking in the sky for falling meteorites, and you'll fall into like an open shaft on the street and kill yourself. There is that's kind of funny, but there's other implication. Imagine that, like, I don't know, a colleague of yours or ex-colleague of yours calls you on the phone, and he's asking you for favor, and you, let's say, you're not completely like ethical, and you tell them, I'm not in Sofia right now, I'm not in town, I'm out of town, so like I'll do it when I return. But you're in the city, and then you meet a friend that's a mutual friend, and
That happened a lot of times.
And suddenly you kind of say to yourself, well, what if those two meet and discuss that the other
You're
friend
not out of town.
yes, that you're not out of town. This is extremely low probability. It's not zero. First of all, they might meet, but they might meet tomorrow or the day after. And even if they meet today, why would they talk about you? Maybe they'll just exchange greetings and move on. But suddenly, that small possibility that they meet and they discuss the fact that you're in town becomes a really viable option, and your kind of like consciousness or possibilities that would happen, and you will worry about this. So the most important thing for the right view is to adjust those probabilities, and the correct view is to remove those possibilities from occurring in your consciousness. So they could occur. They could occur, but once you label them, it's possible for them to occur. Your tendency is to spend overwhelming time and worry that something like that might happen, when in reality they're extremely small and practically never occur.
All right, so back to the second example. Death is an extreme event.
Yes.
What you're saying is that we should, by calibrating our view, we should, in a way, ignore extreme events.
Yes.
Right. So my main question is, nowadays, the markets are, especially when we're talking about common equity,
right?
The entire market tends to overreact. So there are a lot of extreme scenarios happening. So how can you advise a young trader that just came to the company? Well, what can you tell him? How is he supposed to, in his back testing, how is he supposed to just remove that market noise?
Right. Well, first of all, it's we're very bad at actually predicting proper probabilities ourselves. I always look for some sort of a market reaction and how market interprets those probabilities. So the proper, you look for ways to assign probabilities, and you look at what that probability is. And the assignment of the probabilities is something that it arises from the markets. Let's give an example. For example, there is a statistical kind of degree where you actually want to ignore those events or consider them as a potential. And that significance comes at 1% or at 5%. Usually at 5, but if you want to be extra certain, at 1%. What that really means is I think we give it in one of the previous ones, is the chance of the US defaulting. So this is a relevant example. Right now, you have, maybe France. France is a good example. So the probability that France defaults is less than 1% a year, maybe 70 or 80 basis points. And if you do a CDS, a credit default swap on France, For 5 years, you could kind of hedge that risk under 4% of payment total for your notional for 5 years. So you could buy that insurance at 4% of notional. I would venture and say that the probability of France of defaulting is 0. Because you could buy an instrument that hedges that risk, and the cost of that instrument over 5 years is less than 5%. So we're always looking for patterns, something like that. In terms of kind of like, other noise, there is other pattern. There are other patterns that are very kind of obvious, but most people probably don't follow them. So for example, right, I don't know if I said that particular example. So this is the pattern that I discovered. So it's based on basketball and betting basketball. So if you have an NBA betting line, that betting line is very fair, and there are a lot of kind of professional gamblers that follow NBA, and statistics on NBA injuries and kind of team reports are actually very strictly followed. So people feel comfortable betting a lot of money on NBA games. You could bet easily $50,000 on an NBA game, and they'll allow you to do that. If you go on college basketball games, you will find that this is not the case. So especially if those are not like top ranked teams, the line would be maybe $4,000 max, and they would move very extreme because casinos and kind of gamblers have learned that people will trade on inside information. So the way I kind of structure that thing is companies that are really top 100 in the US. I feel that those companies are very well covered. They have very good kind of following the rules and release information regularly. And once you drop below those 100 companies, a lot of kind of standards of release of information to shareholders may not be followed. And a good example here is SMCI, Super Microcomputers, where they failed to file their kind of annual report and it could have been delisted. So if you identify those 100 companies, then you find a pattern is that it's very rare for a company that's top 100 and is liked by analysts that it would trade more than 40% below its consensus target. So this is like a lot of work. So first of all, you have to limit yourself to top 100 companies. Then you have to limit yourself to companies that have at least 75% strong buy or buy and practically no sells. And you have to have price levels that are 40% below the current target. And there is at least one company, there's probably more, NVIDIA right now. NVIDIA is trading at, I don't know, 113, 114, something to that extent. Average price target is 170. So we're talking about more than nearly 50% discount. It's very unlikely that a large company like that, that's followed by analysts and investors, trades for extended period of time at those current levels. And even though the stock has gone down from 130 to maybe 140 levels, even to 110, consensus estimates have not been there. So my experience tells me that this is kind of like a really strong pattern. Of course, the probability is there that analysts may lower their targets, or a company may do something, or there could be change in policies. But usually the kind of favorite scenario is for the stock to go up. So yes, so people do this incorrectly when they give them that kind of step-by-step analysis. They go and apply it to like a $5 billion company. A $5 billion company is just like college basketball. So it may trade at 60% discount to consensus value for a while, and there's just not enough data. So again, like, I guess this is from experience. The tendency is for people is to take that 7-step valuation model and apply it to everything, and that's just not how it is. That's just not how it is.
So your advice here is to compare apples to apples. Big companies.
Yes, right. Wow, this is this brings an example. So, have you heard the saying, behind every successful man stands a successful woman? Have you heard that?
Yeah.
Yes. Do you think it's true?
No.
Right. The pattern here is very simple. So it's like, if a pattern is true or universally true, it has like a very strong kind of like likelihood that it's true again. So again, we're looking and say, okay, what was successful men doing like 5,000 years ago? They would have a harem of women, right?
Right.
Let's go into the animal kingdom. Let's see like a successful tiger. A successful tiger lives alone. So he basically, when tigress is kind of in the heat and wants to get pregnant, she finds a tiger, and it better be like a strong one. And yeah, this is a successful tiger. We're going for lions. Lions also have harem of lionesses. So successful lions have harems of lionesses.
Right.
Bears and pretty much all mammals, we don't have this kind of like successful pairs living together. So this is very strange. If if behind every successful man stands a successful woman, then you expect behind every successful bear to stand like a bear mother. But it doesn't. What is universally true for all animals is usually behind such a strong individual, male individual, there is one mother that did her job well, that raised that puppy or that lion or that tiger well. So we could honestly say that, wow, it's possible that behind every successful man stands a successful woman. My suspicion is that for sure is his mother.
Well, that brings another quote of yours. I'm not sure if we actually ever told it to our listeners, that if a woman really, really loves
Oh,
her
yeah,
man.
we've said that. We've said that.
Oh, we said that.
Yeah,
Okay.
we said that. Well, idea is, again, like the right view is, again, this kind of accumulation of things and seeing patterns that are true in more than one aspect or areas in life. And if you find such a predominant kind of pattern, it's very likely that pattern lives in some shape and form and your analysis. Again, the fact that college basketball is kind of limits on betting are so small just tells you that information travels very, non-linearly or may not be transferred at all to most players. And that's why you see professional gamblers not betting that much money on college basketball, because the reporting requirements are not standardized and may not be followed. Those people are not professional athletes, don't really get paid, so you can't be sure about their state of mind. They're trying to juggle a few things, and there may not be enough data. So you don't know many of those players at all, their statistics or what they're capable of. Well, all those things are not true for NBA players. You have a lot of statistics for them, and standards for releasing informations are followed, and that's why you have a little bit more integrous market. And again, we're talking about the top 100 stocks. Do you know how many stocks are listed in the US? Would you care to guess?
12,000?
Something like that. Something like about 10,000. So yeah.
So that model is not going to work everywhere.
Yeah. I mean, yeah, don't bet a lot.
Right. There is a book by a Bulgarian writer.
Yes.
Called 160 Years on Wall Street.
Right.
You have been interviewed by the writer.
Yes.
Right. So in that interview, you mentioned that the successful trader should adapt continuously
Yes.
throughout his career. So comparing today's market to back when you were on Wall Street, did you have to implement and recalibrate your right view? Is it any different than how it was before?
Data was, I really, sometimes I wonder, like, okay, like, was I mature? Maybe. Information was a lot more difficult to get. And
Would that give you an edge if you were to get the information?
yes, incredible edge. Like that's the primary thing, that actually information wasn't there, right? But we want to return to the right view, to the right
Right.
view. So once you begin to like to do all those, like, right views, there are other adjustments that need to be made. There are other adjustments that need to be made. And this is actually very important, is kind of like, how you calibrate and think about things. So for example, it seems like, again, like we were borrowing an example we mentioned before, how Michael Jordan was statistically one of the best NBA players and one of the worst NBA owners. So the most important thing is to actually determine which area of your life you would want to be putting an effort to, and assume that all other areas of your life, things are going to be no more than 2 standard deviations away from the average. And we mentioned that before about, like, how many women you're going to sleep and so forth. And like, are you going to have sex on the first date? Should you be expecting sex on first date? And the obvious answer here is, like, I really don't know the statistics, but my experience and kind of like, of experience from others is less than 5% that people have sex on the first day. Would you say that's fair?
Yeah, I would say that's fair.
Yeah, that's probably fair. So when you go on a first date, your mindset should be, there's going to be no sex. Zero possibility of sex. Because if your monkey expects something that could happen, you're going to force it. And this is, like, again, true with trading. So it's like, we tell people, look, for several months, most people lose money. And it's for various reasons. Like they have kind of like cost in terms of like data, they have cost in terms of the terminal, the platform, and you have to, like, you probably have never traded before, so you usually do some very stupid things. So the right set should be, in the first 3 months you're not going to make money. I mean, the possibility that you make money is there, but over 95% of the people do not make money in the first 3 months. So you should immediately scale down and say, expectation should be for you not to make money in the first 3 months.
Once again, slightly depressing for the beginner trader.
Right. It's difficult to do. And the various things that prevent people from doing this. I want to give you like one example. So the example I've shared with Mr. Kirchhoff, and he probably liked it. He really liked it. So imagine this. I'm maybe 30 years old. Let's see, how old I was. 34. So it's maybe 33, 44 Christ age. So, right, it's a very good age. I'm in between jobs, my first hedge fund and second hedge fund, and I'm interviewing at various hedge funds. And one of the hedge funds actually didn't go, sends me to an assessment test. And the assessment test is I don't know what to expect. But I go there and they give me an exam, 100 pages, 100 questions, and 2 hours. And the instructions say there is one correct answer for every question, and there is like A, B, C, D, so 4 possibilities. Please mark your answer with an X, or mark your answer. I don't really remember, but that was the instructions. So an hour passes by. So I go there at 10 maybe. It's 11 o'clock. I have an hour. And I'm question 27 or 28. And I mentally note that I'm behind. I really don't panic, but I kind of you should hurry up. And it's I don't know, 11:55, 5 minutes left, and I'm question, I don't know, 59, something like that. So there's 40 questions.
Wow. I didn't know the details, actually.
Yeah, so 40 questions left. And the question in my mind is Nikolai, what do we do here? A, B, C, D, AAA, B,
25% chance.
First of all, this was a very new thing to me. I've always been a good student, and while it has happened that I would guess on several questions, or there's never been such a large set of questions that I never actually got even to read. It's one thing to not understand the question, or not be able to answer it. The questions were not hard; they were just taking time. And I decided that if those people know anything about trading, they should not be valuing this assessment test too high. And I just don't want to cheat. I don't know why I decided, really, in retrospect, I would say that it's a little bit random, but I definitely decided, Nikolai, you're not going to cheat here. You're not going to do A, B, C, D, A, B, C, D, A, B, C, D. You're going to try to guess maybe a few answers by the things, but you're not going to cheat. And I'm going to the next interview, and I'm bringing my grades from college, my SAT and GMAT scores, which are really good, top 1%. And getting ready to make the case that I'm not dumb, which is a really uncomfortable position to be, because clearly I was dumb based on that assessment test.
Half the questions not answered.
Nearly half. And the interviewers came down and said, Nikolai, you have the high score. I was like,
the highest score?
Yeah, high score. And I said, wow, I really thought I didn't do well because I didn't answer maybe 40 questions, something like that. I said, we've designed the test such that people would have a realistic chance of answering half of them. And we want to see what you're going to do next.
Under pressure.
What you're going to do, under pressure. And this is what why we just started with the integrity series. And this is what really, really makes the difference. At some point, people lack experience, but they gain it. But after a certain point, what they lack is integrity and realistic chance of how this thing works. And if I have to give you the right view of how I view life and how I view trading, this is how I view it. Realistically in life, you're gonna have time to answer maybe no more than 50, but realistically no more 30% of the questions correct. You're just not gonna have time. You're not gonna have time. And the most important thing is you can never really be sure, but at some point, people feel free to speculate, and they hardly ever look around and see what other people have said about similar questions. Moreover, some questions we have no correct answer. So even though the instructions say there is one correct answer, some questions you can only get penalized. Some questions will have all answers that are correct. So it doesn't matter what you answer. Some questions are not going to be randomly graded. So for one person, question number 17 and 52 are not graded. Doesn't matter what you answered. For the other person, it's 16, 48, and 94 are not going to be graded, whatever you answered. Introducing some randomness. So it's like, if you drive by the highway and there's a police cop, you're going to get a ticket. But if there's no police cop, like, you're not going to get a ticket. So even if you're over the speed limit in a lot. So this is random. It's random. And the most important thing is the difficult questions will be randomly distributed through your test, such that you could go to question number 5 and that question could be so difficult and you could get discouraged. And this is like, the really what life is about. Even if you do very well, it's going to feel like you're failing.
Was that the case?
Yes. You may not be failing, but invariably you will feel like you're failing something. So like, you always feel you're failing something. It's a constant kind of feeling around life because you haven't answered even half the questions.
Even outside the test, like trading the career.
Yes. You're going to feel like you're failing. You may be hitting it out of ballpark, but the feeling of failure will be like companion, will be there. You always ask, I should have sold here. I should have added here. When in reality, it's like, nobody does that. So like 99% of the people kind of like never optimize those things, but you're optimizing it like, in retrospect. The other thing that prevents people from kind of like, really proceeding correctly is that people have actually answered many of those questions. And we somehow doubt their answer. Like, for example, what do women want? Nobody has ever known, except that people find kind of exceptions. Like, I hear it all the time. Like, oh, my wife will like this. Your wife will like this? How do you know?
It's presuming.
It's presuming. You don't know. And once in a while you're right. And then you build up your confidence
based on that one time.
Based on those few times. And this is just a lucky guesses. And it's just a matter of time. And if I have to give advice to our young audience, or even not so young audience, it's like, this is like really what happened is, like, the time my partner, we were like talking how it would be good to go to Miami. Virtually the next day I made a lot of money and surprised her with the ticket to Miami. And guess what? Her best friend had like a birthday celebration that I had forgotten. And all this thing, like, I'm expecting, like, Rospedos and
gratitude for it.
Yes, for how like incredible boyfriend I am, but reality what turned out to be a crying fest. So at the end of the day, I didn't know if we're gonna be breaking up is because I didn't listen. Another example, like, really is like, you go into the store to buy sugar because you're low on sugar, and as you're picking up the one package of sugar, you see the 2 kilogram sugar, that's a little 2 times bigger, is on sale and it's cheaper, and you decide to buy the 2 kilogram sugar because it's a deal. And
you're going to be needing sugar in the future.
So. Yeah, you store it. And then, like, your partner shows you that the container that she has for the sugar fits only 1 kilogram. And she's asking, what are we gonna do with that 1 kilogram sugar? And I say, well, just put it right next to it. And suddenly, like, you realize that she doesn't do it that way, because once she spilled, like, the extra kilogram of sugar, and she absolutely hates it. And this ends up with, like, Nikolai, you do what you want. You never ask me for anything. You're just such a, like,
I'm sure it happened to
egoist. So
everybody.
At that point, it's like, you don't know. And that's why when you go to the store, you go and buy what they send you to buy, the brand, that they send you to buy, the package that they send you to buy for roughly the price that they send you, that they expect you to pay.
Even if there's a discount.
Yes. And if something makes more economic sense, you call. And even then, it's 50-50. You don't know. So, I mean, this is like a really important thing to understand, that people have said, you never know what a woman wants. And yet, we try to guess. And all seems reasonable to us. And invariably, it's going to end up in tears over, like, 1 kilogram of sugar. So, like, I had to sleep on the couch. So I was like thinking to myself, great, Nikolai, you saved a little bit of money, but now you're sleeping on the couch. So again, this is something we know, but until it happens to you, and will you adjust your behavior? We don't know. And this is all fun and games. This is all fun and games when it comes into the markets. And again, like, this is like really came into the tariffs. And the tariffs, interest rates shot up. So when kind of like, interest rate kind of started rising, and people started saying how like inflation could come back. And this is like, again, truth is no. So what other people have said is true. But somehow the price action or the emotionality of the market takes you away. So what really occurs, as I said, like Professor Friedman, who received the Nobel Prize for his work on monetary theory, said that inflation is always and everywhere a monetary phenomenon. And Professor Friedman knew about tariffs. So if he didn't include tariffs in his summary of what inflation is, maybe they don't matter. And yes, tariffs can temporarily increase inflationary pressure, but unless the central bank kind of starts printing money, sustainable inflation is not going to show. But this is really when the market starts going that way, and people explain how kind of tariff wars can actually result in high and high inflation, people really forget. So the right view is if a lot of people over the years have looked at this phenomena, and some of them have actually quite accomplished or distinguished themselves, and they reach like a very strong conclusion about some phenomena, that phenomenon is right. The market is incorrect. The market is incorrect. Yeah.
Would you would probably agree that it's becoming harder? Maybe not for you, but for somebody that doesn't have that much of an experience. You've been through how many business cycles?
Right. Well, that's another one. Yes, the difficulty in trading, again, like, we're going through like, this kind of phenomena. I don't know if we spoke it in the previous one, but one of the right views is basically saying is when a coin is unfair. So people are really bad with those probabilities, the flipping coins and like playing Russian roulette. So two really kind of statistical misunderstanding, like, lack of knowledge here is very important. So this is the phenomena. You have a coin that's basically being flipped, and after like, the fifth flip, if it's always heads, that's like 3% chance, so like 1/32. At this point, you should suspect that the coin is actually unfair. So I know in the textbooks, it said that flipping 3 times is like actually what it is, but in reality, it's on the 5th time that you do it, that you are correct in assuming that it's possible that the coin is unfair. If you wait for the 10th time, you can be more sure, but the suspicion should begin on the 5th, 6th time. This is the same thing with kind of like, girlfriends or women. If you really could suspect that even on the 2nd girlfriend or the 3rd girlfriend, that qualities that those women share, or boyfriend, probably true or present in most people, but you correctly assume that correctly after the fifth or sixth time. So extrapolating that flip of a coin, it seems like in order to trade seasonality correctly in the market, you probably need at least, statistically speaking, 5 business cycles. And the 5 business cycles is between 7 and 10 years each. We're talking about like
Each.
35 to or 50 years to like collect the data. Very few people go there. Realistically speaking, you need 2 business cycles, and I could see it in the traders, like that when I say I'm going to buy it and I'm going to hold it for years, I really sense some sort of a resistance, and this is a very difficult thing to drop. But yeah, it's important to keep that in mind. Let me give you like another example. So the example here is actually real. Okay, so we're playing Russian roulette. What is the chance? You're probably not going to know, but I'm going to ask you that you do not die if you play 6 times Russian roulette. So the chance of like you dying is 1/6 each time. If you're not dying, 5/6 times 6 times, it's about 30%. So in order to get to like below the 5%, you need about 15 to 18 times to play Russian roulette. So you could play Russian roulette 10, 12 times, and it's not unreasonable for you to survive. I mean, if you play 12 times, like the chance of you living is 10%, but it's not 0. So this is kind of like the things that people confuse. They don't understand. So for example, like a strategy could make money 6 times in a row. And you could be easily playing Russian roulette. So the chance of you living if you play 6 times Russian roulette is kind of like 30%. It's not 0. And people take this kind of like, things for granted. So many strategies could be very profitable for a while, only for you to realize is that at some point this is a Russian roulette and you've gotten very lucky. Very lucky. And this is like, again, like it shows up in your kind of in your kind of presentation. So once the trader was explaining some sort of a trade, he said, I've done a back test, Nikolai, Mr. Stoikov, and it shows that 90% of the time when this thing happens, when A event occurs, setup occurs, then B happens. And I said, is it 90%, 18 out of 20, or is it 87%, 5 out of 6? I said, it doesn't matter. I said, of course it matters. Of course it matters. The difference to our audience is clearly if event is like 5 out of 6, it's kind of like 87%. It's more favorable to occur. But what happens is the true probability could be 75% for all we know. And the difference between correctly sizing 75% opportunity to win versus 90% opportunity to win is your size is 50% bigger on the 90% opportunity to win. So if the probability is really 90% versus 75%, and you know that, your size on the 90% chance to win trade in general, like if they're kind of equally likely to win and lose same amount, it's 50% higher. So yeah, really kind of like it's really important to know those statistics and to kind of look for patterns that recur. Another like view that's becoming kind of like very interesting, and it's kind of like we have a way of teaching our traders, and again, like to explain it is like I think I explained it somewhere else, where how you buy a Lambo. So before you buy a brand new Lambo, you want to buy a 10-year Golf. A 10-year Golf, you drive it 2 years, 20,000 kilometers, 10,000 kilometers each year. You're probably going to get into a crash, or you're going to do something to it, and you need repair. So you need to find where VW, Volkswagen mechanics are. Everybody says that you can fix any car, but in reality, that's not true. You sell your Volkswagen after 2 years, and then you buy a 3-year BMW M3. Again, you drive it for 3 years, 30,000 kilometers, 10,000 each year, and you need to find where the BMW mechanics are. Who are the BMW mechanics? You probably have like a full insurance, so you probably get into an accident. You really need to see how quickly your insurance company pays you, because I mean, in the contract says they pay you, but this is not immediate.
Right? It's not.
Right. So, and after 5 years, then you buy the new Lambo, because you have all the proper kind of like, background, and you're familiar with all the nuances of cheaper cars.
For each scenario.
For each scenario. And at least you're not going to be overwhelmed. So it's going to be something most likely you faced. And then you're going to buy a Lambo. And this is how we teach our traders. So we said in the beginning, we trade very specific kind of set of market sectors, not necessarily common stocks. And they trade intraday, they try to make the spread, and then they kind of go into overnight positions with more liquid ones, and then suddenly all your restrictions after 2 years usually gets lifted, and you could pretty much trade everything after this. And what I was speaking to one of the traders, and he's interested in starting to trade common stocks, and he started like picking $2 billion companies, $5 billion companies, $10 billion companies, and I said, you just don't want to drive the Golf. You should start with the most liquid NASDAQ names like Apple, Google, Amazon, Nvidia. Try to make money intraday for those stocks. And then only after 6 months, then translate into maybe like a little bit more exotic sectors. And then after 2 years, maybe, if things go well, go into those new stocks, the small cap stocks. It's like, but yeah, this is like, a very kind of like common view that if you learn something or if you're smart, you don't need to go through the process. You do. And and that's when a lot of those things occur. So yeah, and this is like the integrity. It's like it takes you 5 years to learn a language. It takes you 2 years to become proficient in any market. And the proficiency starts again, starting with intradays, with the most liquid, and then you kind of graduate towards like, a little bit maybe smaller, a little bit more special situations, maybe something that you hold for a little bit longer than intraday. But yeah, people don't want to do that. So it's like once they decide to switch markets, they or learn a new market, they really don't want to drive the Golf. They really want to go for the Lambo right away. I mean, what could be more risky than a $5 billion company? Yeah, hardly anything. Hardly anything.
Yeah, with each episode, it kind of gets in my mind that successfully trading in the long term, it's a little bit more difficult than it looks.
Right.
And you're the trader himself is the one making it difficult.
Yes, the trader is making himself difficult because really this lack of integrity. I mean, this pattern is there. He remembers it. And this is a real case. And I said, like, he started asking me about opinions about this stock and that stock. And I said, like, you just need to trade those Magnificent 7 stocks. It's like, that's what you need to do successfully. To gain experience. It's like, it's too early to start taking those positions. If you win, I mean, and this is the whole thing. If you win, it's going to give you the overconfidence that you could do that successfully when you actually don't know those sectors and don't know those companies well. And if you lose, you're going to be so discouraged that you may not return to them and just return to your market. So this is such a big divergence, and this clearly feels wrong. It really feels wrong. So it's like, yeah, go slow. So again, we are born with with some sort of a very incorrect nervous system, a very like, how should I say it? The average human being only 200 years ago was living up to the age of 30 or 40. So many of the implications of that are really lost on our generation. So what happens is, if you're living up to the age of 30, 35, you really needed to have kind of 10 children before the age of 35.
Because you would die.
Because you would die from like disease or war or something like that. And maybe 4 or 5 of them will die at childbirth or not going to reach adulthood. And maybe like 5 or 6 going to reach adulthood, but 1 or 2 are going to die early adults and maybe not have any children. So in order to have successors, you really needed to think about only about sex. And the idea of waiting and investing into the future for getting better and better every year was something that was not optimal. So your nervous system, what you feel or what you act, what your inner voice tells you, is this kind of rushed decision-making, rushed kind of effort, because that was true only 200 years ago. And it's been true maybe for a million years ago. And now it's no longer true. Now it's no longer true because people live near 80 years old. And you have time, and the returns on this kind of getting better and better. But the rush, the feel, what your nervous system feels, that you're out of time, that you really need to go big or go home, is always there. And that
stayed.
That stays. So the right view is basically understanding yourself and kind of what your errors are. So we celebrate things like Christopher Columbus, and what he did is actually incorrect. Well, this is actually incorrect. So the example here that I give, I probably have used it, but I'll give it again. David Goggins, the guy had never run more than 10 kilometers ever in his life. He's in a good shape, but never a long distance. He decides to raise money for veterans. Okay, good cause. But why do you need to rush them right now? And he enters a race, 100-kilometer race, having never ran consistently longer than 10 kilometers. And he finishes the race and collapses on a chair and shits his pants and has to be taken to the hospital.
That really happened?
That really happened. So the right view is basically saying look, small increments, 5 to 10% week increments. He could have gotten there to that race, but it would have taken him 1 year longer. I mean, is it really? Is it worth your life? I mean, this is the whole thing that it's doable, and all the people that are along the way were telling him that, hey, he should kind of slow down. All the specialists were concerned. There was a coach that was at the 100-mile race that was worried about him, that he didn't look like a long-distance runner. And there's a reason why he didn't look like a long-distance runner, because he wasn't at the time. So we should know our kind of right view is to say, hey, I usually rush things. So going a step slower is probably about right. And this should be a constant reminder to yourself. Like usually I rush. It's like usually I need eyeglasses, like, to see well. So it's like if you put eyeglasses, you just do it slowly. So and this is very hard. This is very hard, and lack of integrity is there. So it's like once in a while, you doing things slower kind of produces suboptimal results than doing it faster. That's true. But on average, if you were slower, you'd make less mistakes. So it's kind of like, it's not a perfect scenario. And people kind of try to go slow, but only one example where slower reaction time or slower kind of answer or slower decision making was kind of suboptimal, it turns out. They take it as definitive proof that there's no need to be slow. You could lose. They're looking for optimal scenario, and the optimal scenario is like not available. What we usually know is that the shortcomings are pretty great, and if you do slowly things, that's better. It's better.
Okay.
Right. Let me give you an example. So let's imagine you go box, and you box with like 5 or 6 people, and you box like the way you spar with them, the way you spar usually. And then you decide to be a bad boy and change your inner dialogue. And your inner dialogue becomes, fuck you, motherfucker, I'm going to smack you up. So every 30 seconds, you kind of hit your gloves. You don't say anything, but you repeat silently. You say, fuck you, motherfucker, I'm going to fuck you up. 30 seconds.
Okay.
And you boxing with all those people. And then we change your inner dialogue and becomes, I love you, man. And I have all the love in the world for you. And I'm going to give you a tsunami of free love. Like waves of free love. And this is really important for you to try. So what people don't understand, and this is like very difficult to understand, is that you are a kind of like schizophrenic, and you have a child inside you. And if you think about it, if you have a young child, you would watch your language. You're not going to use negative words. Everything's going to be good. The most important thing is negativity really occurs. Negativity really occurs, but the way I encourage people, try myself to handle it, is with sarcasm. So imagine this. So for example, like stock goes up, stock loves you if you're long. Stock goes down, stock doesn't love you. And obviously if a stock loves you, it's better than stock not loving you. But this is very incorrect to say it or kind of even think about it this way. The correct way to think about this is like, if stock goes up, stock loves you. If stock goes down, stock doesn't love you, but you love that even more.
All right.
The most important thing about kind of doing those kind of like incorporating this thing is what I do. It seems like cold. I take like ice cold baths and try to do them every morning. And I really kind of like, before I plunge into that cold water, I said to myself, oh, Nikolai, you're going to love it.
Really?
Yes, you're going to love it. Obviously, I'm like, there's a part of you that doesn't really love it or is not sure about it. But to a degree, this needs to be a physical effort where something's going to be like, stressful, and you plunge yourself. And if you do that regularly, market moving in either direction is going to be less stressful. The most important thing is that to realize that you need to stress your kind of like nervous system. But while stressing it, you need to practice this kind of embracing the pain, embracing kind of like, you know, the uncomfortableness, and degree of kind of like, a degree of that. You always look for the stuff going your way, the easy things, and the oneness. And it's like when they call the separation, is the idea to embrace the uncomfort, embrace the cold. And I don't know what it is about the cold, but let me tell you, like, you know, cold showers, cold baths, I'm really, really something out of this world. Nothing, nothing can beat that.
But does that actually work? Like, I'm not gonna lie, I avoid cold showers, cold ice bucket showers, but I heard this many times. By you telling yourself, oh, you're gonna love it, with time, you don't hate it as much.
That's right. The most important thing is to realize that. How can I say this? I was all right. I was in India, and young people were kind of like young people, maybe early 30s, late 30s. They're talking about, like, I don't know why we're talking about this at the conference, being on the edge, and how each describing how situation got intense, and they kind of like reached the edge and they really pushed it, and I don't know, something good happens. And I was laughing about this. First of all, I don't really know if they were on the edge, they were near the edge. At some point, like, you know, in your life, what's going to happen is you're going to go to the edge and you're going to see the abyss. And you're going to hear all kind of like things that the abyss is. And this is of your making. So this is like, you know, in intense moments like these, you realize that you're in the world, but the world is in you. What that really means is that all the negative qualities of the abyss is you project them. Just how you project how cold is going to feel. If you actually write down and you have the integrity to write down what do you expect a cold, ice cold bath to be in very big detail. So not just going to be cold. How you're going to be cold, how long you're going to stay, like, you know, is it going to feel really burning or you could stay longer? And if you make all the predictions of how the cold bath would feel, you will find out that you're incorrect. On some things you're right. I mean, so it's not going to be like a warm experience, but a lot of the extremes that you're making about the cold bath is you're projecting it. Just how you're projecting at the abyss. The abyss is in you. And the kind of like, you know, constantly kind of training yourself to just embrace the abyss. Embrace the pain. So, like, you know, don't describe it in negative terms. Oh, it's going to be good. Oh, it's going to be chilly. I don't know, your testicles will get small, no doubt about it. That's going to be good. Then it's going to feel like warm. And again, all the things you think are going to happen for the cold bath, if you actually sit down and write down precisely what you think is going to happen, you're going to think you're wrong. And sometimes you think you're going to love it and you don't. Sometimes you actually think you're going to hate it and you love it. I mean, I'm wrong. I'm wrong. And every single time it's a traumatic experience, but I'm amazed at how incorrect I am to predict how I'll feel afterwards. So while in the cold bath beforehand.
It's always like a slap in the face, yeah?
Yeah, so it's like a reminder. It's like everything that you think is going to be bad may not be so bad. Everything that you think that's going to be good, probably not going to be that good. And it's unpredictable. Sometimes you think it's going to be bad and it's going to be actually good. And sometimes you think it's going to be good and actually, like, you know, you don't feel well. So yeah, like the understanding is that I constantly project. And even things that you do regularly, you make an error, but with the things you haven't done, you make tremendous amount of errors. But the most important thing is this kind of positive dialogue. So, and to a degree, taking it to the edge. So it's like, you constantly need to stress your nervous system in a kind of healthy way. Otherwise, your body normalizes things, and stress comes. So the most important thing is, if I have to do it, is life works opposite to what more people think. If you embrace pain, pleasure is going to come. And if you seek pleasure, pain is going to come. And that's very obvious that this law of attraction doesn't really work, because law of attraction tells you that you should just dream. And has it really worked for anybody? I mean, I know you feel good about this, but yes. So the reality is, you need to embrace your negative tick. And once you embrace your negative tick, and the reason why you don't embrace the negative tick down is because you compare it to the positive thing. But the right comparison, the right view, is that the negative tick should be compared to the ice cold bath. And once you compare it to the ice cold bath, negative tick is not bad. So in that particular sense, if you're stressed, the right view is not try to avoid the negative outcome, or try to prevent it, or try to pray for it. The right view is to make it even worse, such that negative outcome actually becomes good. So the example here is you bet a lot of money, you want to buy a Porsche 911, Mr. Kirchhoff, right? Right.
For example,
Porsche 911, having a Porsche 911 is good, and not having a Porsche 911 is bad. That's not true. If you have no leg, suddenly, even if you have Porsche 911, that's not good. So in that particular sense, the right view is, again, changing our circumstances, and reminding yourself that nothing good comes without pain. No pain, no gain. And dreaming about 9/11 bringing you joy is basically an exercise in illusion. So it's not going to bring you just joy. Everything is neutral. And if you see the joy in it, then you're not seeing the pain. But yes. And one last thing for the right view, and this is very important, is to realize that people are 98% monkeys and 2%, I don't know, something else. Einstein, maybe. And there's no exceptions. There's really no exceptions. The errors that most people do is they think that out of the 100 people in their life, 98% are complete monkeys and 2% are angels. That's incorrect. Those 2% angels are in fact 98% monkeys.
No angels.
There's no angels. So the most important thing, and sometimes all you see is a monkey. So it's people do monkey things and monkeying around, and you see a lot of monkey, and the monkey is pretty strong. But the important thing is to realize that there's more. There's more in everybody. And once, we're still talking about this kind of talk when I left, when I said for the the anniversary of CEO of Alaric, Mr. Payotov, and I said I don't wish you love and happiness because this always ends up with a broken heart and an unpaid electricity bill. And one of the employees, not even the traders, a much older person, asked me Mr. Stoikov, did you really mean that? Does it always need to end like that, with broken heart and unpaid electricity bill? I said, you're correct. It doesn't need to end like that. It could end up you being hit by a truck. But the error of making, if you fall in love with something, you must think that this is 100% or 98% angel. And everything is flawed. Everything is flawed. And the error, which is big when you think that somebody is 100% monkey, but the consequences are not as large. But if you think somebody is 100% angel, oh boy,
you're in for a surprise.
or in for surprise. And the most important thing is they could behave like an angel for a little bit, for like 3, maybe 6 months, but they're invariably monkeys. They're invariably monkeys. And yeah, so the error is there. So the right view is knowing what we are. So we incredibly judgmental of other people's, not understanding circumstances, and forget that they could behave like a complete monkey, but behind that 100% monkey behavior, there's 2% more. That's always there. It's always there. It's always there. I think now we're... Unless you have more questions.
No.
Oh, you sure?
Yeah, I'm sure. Just as usual, a lot to take in. It's slight depression.
Right. This is not a slight depression. This is kind of like, invariably kind of like realization that many of those things you could have known, or you know them and you didn't summarize them. This is actually kind of like very normal, and kind of like yeah, it's normal. It's normal to feel kind of this kind of regret that, like, mistakes that you obviously could have avoided. But the reality of it is, not all mistakes could be avoided. So some of those mistakes need to be experienced personally. You really need to go and buy that 2 kilogram sugar to realize that you don't know what we want. So it's like, realistically, like, is it possible to teach somebody trading and investing without having any experience in the market? Of course it's possible. But in reality, it's like nobody does that. So it's like, again, this is one of the kind of like the going back and optimizing, to say, hey, if I had known this and really applied it consistently, many things would have been better. That's true. But nobody has done that.
There's no way you actually could have known this.
Yeah, so the right view is to realize that, like, that's unreasonable. Like, I don't even know if anybody has ever done this. And this is like, the good thing about Buddhism. It's like the idea about Buddha is, like, maybe we'll speak about it one day, is not that Buddha is the perfect teacher. He's just the best. Not perfect. He's made many mistakes, and this is like the whole thing. It's like, uptick and downtick. We always want to make the right decision, but the right decision comes with repetitions. And really, like, kind of like, there's some energy inside you that wants to know. And this is like the most important thing is, like, people are extremely kind of linear. So this is like, one of the advices I said to the traders, I said, I don't think you've ever been arrested. I don't think anybody has ever called cops on you. And I don't think you've called the cops on anybody. Is it possible that you're too good? Is it? It's like, maybe you should try being bad. I said, go to a store that you don't like and see what happens. Like, threaten them with the police. Like, if they do something, like the price is incorrect, or they kind of like lost something, I said, like, go there and threaten them. See what happens. Like, maybe you get like a free discount. And I said, like, but when you try to be bad, try to be like a lot better another day. So normally when you're kind of like kind of under pressure, let's say real case, you get into some sort of, I don't know, road rage, and this person starts cursing you and spits like on your car. And tendency is like, to get angry and maybe spit back. You change it and say, I love you, man. And I have tsunami of love for you. See what happens? Right. So the right view is basically, it's not something that you necessarily have. It's just realization is that I'm extremely consistent and lack a lot of standard deviations in many of those things. And the easiest thing to do is experiment on the downside. So be bad. People want to be bad. Be really bad. Really call the police. Stomp on the floor, call them idiots, call them thieves, accuse them of unethical behavior. See what happens. See how you sleep. And then on the other side, go the opposite way. So people screaming, spitting on your car, and you're blessing them and kissing them. See what happens. How you sleep. Yeah. Right view is for you to find out. It's tendencies people tell me oh, Nikolai, do you think I was right? So I don't know. How could I possibly know he was right? Do you feel well? And then so you were right, but you don't feel good. And yeah, you don't feel good because you haven't really experimented. And when people get angry at the markets and start banging on keyboards and desks and said you really need to go boxing and see how you fuck you motherfucker, I'm gonna fuck you up. See how you box. And I love you, man. I have endless love for you. And when the market goes against you, you should really, your view should be based on your experience that you really tried. And yeah, it's your easiest thing to do is to get angry, but this is not the optimal thing to do. But you really need to find out.
How long did it take you again? How many
years? Decades. Decades. Small steps, incremental steps.
Yeah. That's it for this episode?
That's it.
Thank you very much for being with us. Please like and subscribe. Right. It's going to help our channel grow. And let us know whether you like that format.
Oh, I like it.
Thank you.
All right. Thank you.